Hello, this is Steve from the Free Bullion Investment Guide. Today is the 19th of January. I'm going to do a review and outlook for the US dollar. This is the US dollar's daily chart. In my daily chart for the US dollar, I have a descending channel. And this channel is from my last blog post, which was titled The Road of Uncertainty is Silver and Gold's Best Friend. It was posted about 2 weeks ago. When we click onto that and then go to the outlook for the US dollar, you can see I have that descending channel. Now, I wrote in that outlook that the channel is narrow and that narrow channels are meant to be broken. And usually when they break, it gives you an idea as to which way the price of any asset will move in the future. And in this case, the US dollar, it stopped after it broke below it, and then it fell to the $95 price level, but then it bounced back up. And actually yesterday it moved up above the top of the upper trend line of the descending channel. And it did that when China came out and said that they had proposed a 6-year deal in the trade war to expand their imports of U.S. goods. And that made the market happy and the U.S. dollar happy, traders happy, and it helped the dollar move higher. And basically what we're seeing out of the US dollar is just a choppy sideways movement. In the US dollar breaking the descending channel, let me move that out of the way there. It created a rising expanding wedge, or a falling expanding wedge, falling expanding wedge, which is a positive pattern for the US dollar. So I mean, it's slitting right up against it. There's really no other trend lines to find except for one other, which I'll show you in a minute. But as far as to find any other, I mean, I'm looking right now even, and there really isn't a whole lot. There really isn't a whole lot to find in the US dollar, except there is a smaller rising expanding wedge inside of the falling expanding wedge, and I wrote that right there. So the rising, there is no way to say which one is going to be broken first. It does look like, by looking at the MACD and the relative strength index, that the US dollar will move above the falling expanding wedge before it falls below the rising expanding wedge. But other than by looking at the bottom indicators, there's really no other way to tell which one's going to be broken first. I would expect more sideways movement out of the US dollar. The 97.70 level is a long-standing resistance level. It dates back to the June of 2017. It was also tested here back in last November, and it hasn't been tested since December. So it doesn't look to be tested anytime soon. The 96.50 level looks to be more of a resistance level right now, but we'll see what the US dollar does. It's not a very strong resistance level. As you can see, it's been broken many, many, many times. The $97 level seems to be a stronger resistance level for the US dollar, but even that's been broken a lot of times. 97.70 and the $98 level are much stronger resistance levels, and I would be very surprised if there would have to be something bad in the news or something good in the news for the US dollar to break above that level. So anyways, I don't see that happening. My outlook for the US dollar is more sideways movement, and when one or either both of these patterns are broken is when I will post a new video. So I thank you for your time. Take care and God bless.